Welcome traders to yet another episode of Nifty Short Term View. And currently we are looking at the daily and the hourly time frames. On the right hand side I have the daily time frame chart, and on the left hand side I have the hourly chart. Now one thing which we can see very clearly in the daily time frame chart, first I always like to start analyzing the daily time frame chart. What we can see is that price is trading above both of the moving averages. I'm not denying that. But the problem is that we are having consistent resistance which is coming up from these higher levels. One resistance level is close to 17,550 or 17,555. And we have one more resistance band which is from 17,530 to 17,400 levels. And if you can see properly today, we did open gap up. But just because of this resistance band which I've placed over here, market saw an intraday sell-off, and Nifty futures I think closed close to 90 to 91 points down, and Bank Nifty futures have closed close to around, I can say, 277 points down. Now, if you check properly, if I just convert this particular chart into a line chart, we do have a higher high over here in terms of price, but in RSI we have a lower high. According to me, this particular divergence is not very powerful. This negative divergence is not powerful, but it is a sign that bulls are getting tired to take the market higher. Market itself is getting tired. And if you have a look at this particular candle, if this candle would have closed little bit lower, possibly below, say somewhere over here, just below today's low or something, it would look like a dark cloud cover. All right, it would look like a dark cloud cover, and it would have even more bad consequences probably on tomorrow or day after tomorrow's market. But thankfully that has not happened. But yet I would say this particular candle close is not very encouraging for the bulls. Now, if you look at the hourly time frame chart, even over here, we have a higher high over here, and then we have one more high, which is higher than this one. Although I'm not considering to probably connect these two highs or compare these two highs, but if I compare the highs in RSI, then we do certainly have a lower high in RSI and a higher high in price. This is again a negative divergence. This is not a very extremely strong negative divergence, but yes, we cannot deny that. Now suddenly we do have a negative divergence on the hourly chart as well as the daily time frame. Now I think overall market is still flat in terms of trend, even in the hourly chart, even in the daily time frame chart. Market is totally range bound and it is flat until and unless, according to me, we do not close above 17,550 or 17,555 with a pretty big green candle, not a small candle, with a pretty big green candle with decent volumes. Until and unless that does not happen, it will be very difficult for the bulls to go higher, to take the market higher. Once I think we close above that levels and we sustain above it for a couple of days, then maybe we might have some room for the market to go higher. And in case if market wants to come down and to correct significantly, I'm not talking about just 50 to 100 points correction, I'm talking about significant correction, then I think we'll need to break this support band, which is at 17,650 to 16,870. So once we close below this 16,870 level and we sustain below it, at least for a day or maybe two, then probably we'll see some sort of weakness creeping up in the market. All right. Now, let us check the Bank Nifty charts. Now, in Bank Nifty hourly and daily chart, first I'll compare the daily time frame, obviously, as always. We can clearly see that today market opened higher. Bank Nifty futures did open higher, but I think by the end of day, we closed lower. And just if we had closed below today's low, I think it could have been a dark cloud cover, which is the same case in the Nifty futures as well, which could have bad consequences on the market in next few days. But thankfully that didn't happen. But again, even over here, if you see properly, then we have some sort of weakness developing. The reason for that is this particular candle. And if we combine these two candles, okay, it is a negative pattern. Again, this particular candle with this candle is a negative pattern. Although it is not classical bookish dark cloud cover, but it is not a very good pattern. And this particular sell-off is coming up at a very important juncture at a resistance band. And this resistance band is also holding up at a place where we have two candlestick clusters. So this is very, very important. So until and unless Bank Nifty futures don't close above 36,983, or you can say in round figure 37,000, I think all the, whatever the bulls try to do, they try to pull the market higher. It's not going to work. We need a close, a very strong close, probably with a big green candle with very good volumes above 37,000. Until and unless that doesn't happen, it's not going to work out. We are still choppy. We are just chopping around. We are just range bound. The trend is also flat. So the range is basically from 37,000 to probably around, you can say 35,405. So we are just range bound between this particular range as of now. Obviously with time, if the range changes, if at all, I'll obviously share with all of you. And for a significant downside, we'll need to close below 35,400. Until and unless that close doesn't happen, I think it is, waste of time about thinking of a very strong or a big downside in the market as of now, or a very big upside also, until and unless we do not surpass 37,000 levels. Now, just to cross check the line chart, all right, if we see properly, we do have a higher close in the hourly time frame chart in terms of price. But if you look at RSI, we have a lower high. So we have a higher high in terms of price close in hourly charts of Bank Nifty futures, even Nifty futures. And at the same point of time, we have a lower high in RSI, in Nifty, as well as Bank Nifty futures. So this is not a good sign. Although this is not a very, very weak signal, because this particular negative divergence is not extremely weak. It is weak, but not extremely weak. But yes, we should stay cautious and we should not take it lightly. And one more thing we should also keep in mind, that the volatility, thankfully, in last few days has come up. Although it has not come down significantly, it has come down just a little bit. Probably if we close below these levels, say we close below 35,400 levels in Bank Nifty futures, and in the Nifty futures, if you check this level, this is around 16,870, then whatever volatility has come down, it is not significant, it's just a little bit, then I think again we'll start seeing some sort of spike in the volatility. So understand one thing, the trend is flat, we are extremely range bound, trade as less as possible, let the range break happen. Once the range break happens, it might happen that you might miss a couple of trades in that particular time, because if you don't trade for 2-3 days, that there will be trades which you might miss, but it is absolutely all right. There is no point of trading when overall market is choppy and range bound and you just try to punch a trade. But yes, if it is a very high probable trade, in case if you see say a stock like Cipla, just for example, okay, Cipla has been outperforming from a pretty good time. And if you see Cipla coming up somewhere over here at a support band, and then it starts going up higher, and you can probably fancy your chances for a swing trade, it's a different thing. Similar thing you'll be able to see in Sun Pharma. So Sun Pharma also is very strong. It is in an uptrend. And if it starts coming down, you can see we do already have 2 to 3 negative candles, but the trend is up. If it starts coming down, and again, after a drop in the price, if the trend stays up, again, if it starts rising, you can probably fancy your chances for a swing trade. Similar sort of swing trade I had initiated in Hindalco. All right, I had initiated a trade in Hindalco somewhere over here. Stock was overall in an uptrend. It came down, and then I went long somewhere over here. So if such sort of extreme high probable trade, if you find out, yes, you can go for that. But otherwise, average trades, kindly avoid right now, because overall market is choppy and range bound. All right. So trade less and trade wisely. Thank you.